There's a secret every professional trader knows, but no one dares say it out loud. I paid $50,000 to learn this secret, not in some course, not to some guru. I paid it to the market, $7,000 at a time. Quick legal pit stop. This is not financial advice. My therapist insisted I call it expensive, scar tissue-based entertainment. My lawyer agreed. And today, I'm going to show you exactly how I lost every penny, so you don't have to. In the next 3 seconds, your brain will fire 7 trading signals, all of them wrong. I know, because each one cost me exactly $7,000. Throughout this journey, I'll expose all 7 deadly signals. See if you can spot them before they spot you. And somewhere in Connecticut, a computer at Renaissance Technologies just made $12 while you read that sentence. But here's the thing, they're not smarter than you. They just know what you're about to do before you do. You have 2 choices. Click away now and keep donating to Wall Street's Christmas fund, or stay and learn why your brain is their ATM machine. Still here? Good. You're either brave or broke. I was both. 4 stages await. By the end, you'll never trade the same. Hell, you'll never see a chart the same. But first, let me tell you about the day I lost $7,000 in 30 seconds because of a number that wasn't even there. Part 1, the puppet stage. Man is not troubled by events, but by the view he takes of them. Epictetus. Section 1, the round number hypnosis. Quick. What's 49,764 plus 236? Too hard? Okay, what's 50,000 plus 0? See how your brain just relaxed? That's about to cost you thousands. December 2017, Bitcoin kissed $19,764 and reversed. My sell order? Sitting at $20,000 with 47,000 other geniuses. We were waiting for a number that existed only in our heads. See that red candle? That's $7,000 of my kids' college fund. Because I liked round numbers more than round-trip flights to Hawaii. Your brain treats round numbers like magnets. Ancient Babylon programmed us this way. They counted in 60s, we count in 10s. But the worship remains. $10, $50, $100, $1,000. These aren't support levels, they're psychological gravity wells. And guess what? The algorithms know this. They front-run every single one. The market loves stopping at $99.97 just to watch us cry. It's like your GPS saying you've reached your destination while you're still in the parking lot. Renaissance Technologies? They made billions last year. Not trading patterns. Trading your faith in round numbers. They place orders at $49.97 while you wait for $50. By the time your order fills, they're already selling to the next believer. Check your orders right now. How many end in 0.0? That's not trading. That's volunteering as algorithm food. And that was deadly signal number 2. I'll sell at exactly $100. But round numbers are obvious. The next signal? It's hiding in every single trade you've ever made. Section 2, the anchor of agony. What if I told you there's a number controlling your trades that isn't even on the chart? Apple, $180. January 2018. I had spreadsheets, analysis, conviction. What I didn't have was emotional preparation for $90. For 18 months, I checked that position every morning. Not to analyze, to pray. My entry price became my religion, and religions demand sacrifice. See, your brain can't tell the difference between being wrong about a stock and being wrong about your identity. When Apple hit $90, my brain didn't see a 50% loss. It saw a 50% loss of self. So I held, through earnings misses, through market crashes, through every rational exit point, because selling meant admitting that $180 was wrong. And if $180 was wrong, what else was I wrong about? I finally sold at $179.50 for a $50 loss. Next day, $220. That's when I realized I wasn't trading Apple. I was defending my ego from admitting I was wrong at $180. My wife still calls it the Apple incident. I call it tuition. Citadel's algorithms? They track retail entry clusters. They know exactly where you bought. They know exactly where your pain lives. And they hunt it like sharks smell blood. Think of your worst holding right now. Got it? Now answer honestly. Would you buy it today at this price? If no, you're anchored, not analyzing. That was deadly signal number 1. It has to come back to my price. Have you checked that losing position today? The one you can't let go? Comment below. How long have you been married to a number? 2 signals. $14,000 gone. And I haven't even told you about the time I saw Jesus in a candlestick chart. Mini recap. So far, we've exposed two deadly signals that cost me $14,000, round number worship and anchoring to entry price. But here's the crazy part. These are the obvious ones. The next signals, they're invisible until they're expensive. Section 3, the pattern hallucination complex. I'm going to show you something. Tell me what pattern you see. Head and shoulders? Cup and handle? Ascending triangle? It's random numbers from Excel. I made it this morning while eating cereal. Speaking of which, I once saw a bull flag in my Cheerios. Turns out breakfast isn't financial advice. EURUSD, March 2019. I saw the clearest head and shoulders pattern of my life. Textbook. Beautiful. Completely imaginary. Shorted it with confidence. The head became a neck, then a torso, then a full-blown transformer that transformed my $7,000 into ash. I showed the pattern to my mentor. He turned the chart upside down and said, "I see a rocket ship." We were both right and both wrong. Here's a moment of lightness in this darkness. My 8-year-old daughter saw my chart and said, "Daddy, that looks like a giraffe." She was more accurate than my technical analysis. Now she manages my portfolio. Just kidding, but she'd probably do better. Your brain is designed to find faces in clouds. It kept our ancestors alive. Better to see a tiger that isn't there than miss one that is. But in trading, those clouds have your money in them. 2 Sigma? They don't look for patterns. They look for pattern believers. Their algorithms know you'll see a triangle at these exact coordinates, so they fade your faith, not your charts. Every pattern you've ever traded, can you prove it wasn't random? Can you prove it wasn't just your prehistoric brain screaming, "I see a tiger"? Action step. Screenshot your next perfect pattern before you trade it. Come back in 30 days. Still perfect or perfectly random? Signal number 7, that's definitely head and shoulders. At least patterns are free to imagine. The next bias, it'll cost you everything you've won. Section 4, the house money mirage. Pop quiz, you find $100 on the street. You lose $100 from your wallet. Which hurts more? If you said losing your wallet money, congrats, you're human. And you're about to learn why that's expensive. Nvidia calls. Bought for $1,000, worth $8,000 in 2 weeks. House money, I thought. Let it ride. You know what's coming, right? I rolled them into ZRDT SPY puts. Because when you're playing with house money, your brain turns into a drunk tourist in Vegas. Lost it all by lunch. My account showed $7,000 that day, but my brain said you only lost $1,000. That's when I knew I needed help. Watch this. Wallet A, your money. Wallet B, profit money. Your brain thinks they're different. The market knows they're identical. This confusion is worth billions to Wall Street. Market makers call it playing with weak hands. They know exactly when you're gambling with gains. They know your risk tolerance just tripled. They know you're about to do something stupid, and they're positioned for it. Pause the video. Check your account. Which dollars feel different? The ones from that lucky trade? Those are the ones at highest risk right now. Right now, which dollars in your account feel different? The ones from that lucky TSLA call? The crypto moonshot? Those are the ones you'll lose first. Every dollar in your account has the same value. The market doesn't track your P&L. It doesn't know which dollars are house money. Only your broken brain makes that distinction. Signal number 6. It's profit. I can risk it. 4 signals down, $28,000 in tuition paid. And I haven't even told you about the most expensive lesson, the one that nearly broke me. Checkpoint. We're 4 signals deep, $28,000 in losses revealed. Take a breath. The next signal might be happening in your account right now. Still think you're different? Let's find out. Section 5, the gambler's fallacy mirror. August 18, 1913. Monte Carlo Casino. What happened that night is still happening in your trading account. Roulette ball hit black 26 times straight. Millions lost betting on red because it had to change. Fast forward to 2020. Tesla, 10 green days straight. Statistically impossible, I said, loading puts. You know what's actually statistically impossible? Me being right about mean reversion. Day 11, green. Day 12, green. Day 13, my $7,000 was red. Very, very red. I called my poker buddy. He laughed. You know what we call someone who fights the trend? A donor. But here's an inspiring twist. That same poker buddy lost $100K fighting trends. Then he taped this above his screen. The market can stay irrational longer than you can stay solvent. Now he only trades with momentum, up 400% since. Sometimes the best trades are the ones that feel most wrong. See, the market has no memory. Yesterday's price movement has zero correlation with today's. Zero. But your brain insists on creating patterns, creating meaning, creating due reversals. Trend-following algorithms, they feast on your disbelief. They know you'll short the 10th green candle. They know you'll buy puts on overextended moves. They're already positioned to squeeze you out. Your turn. What trend are you fighting because it can't keep going? That's tomorrow's loss unless you act today. What trend are you fighting right now because it has to reverse? That belief is about to become very expensive. Signal number 3. It's gone up too much, must fall. 5 signals exposed, $35,000 in losses revealed. And we're just getting started. The market is a mirror, not a map. Because everything I've shown you, that's just what you can see. In part 2, we go inside your skull, where the real puppet master lives. Part 2, the biochemical trap. The mind is everything. What you think, you become. Buddha. Welcome to your brain on trading. Spoiler alert. It's not pretty. Section 6, the 2.25x pain protocol. Close your eyes. Imagine losing $1,000. Now imagine winning $1,000. One of those hurt more, and that imbalance is about to explain everything. Your brain literally feels loss like a punch to the gut. The win? A pat on the back. That's why you hold losers and cut winners. Your brain is wired to feel pain more than pleasure, by exactly 2.25 times. I call it the masochist multiplier. Oil futures, April 2020. Yes, that April. When oil went negative, my stop loss was at $15. Clear exit plan. But when it hit, my brain screamed like I was sawing off my own arm, so I moved it. Just a little, then a little more. You know what's fun? Explaining to your spouse how oil can be worth negative $40. You know what's less fun? Explaining why you held it there. $7,000 evaporated because my brain literally couldn't process the pain of a $500 loss. Nobel Prize winners proved losses hurt 2.25x more than gains feel good. My account proved they were being conservative. Your brain can't tell the difference between financial loss and physical threat. So stop losses feel like death threats, literally. MRI scans show the same regions lighting up. High-frequency traders, they have no amygdala, no pain receptors. That's their edge. While you're wrestling with evolutionary baggage, they're executing code. Reality check. When did you last move a stop loss? Don't answer in the comments. Answer to your account balance. When did you last move a stop loss? That wasn't strategy. That was your pain receptors hijacking your mouse. Signal number 5. Just move the stop a bit more. But pain is just one chemical in the cocktail. Wait till you see what stress does to your IQ. Section 7. The cortisol combat zone. Ever try to do math during turbulence? That's your brain on volatility. London researchers put saliva tests on trading desks. Discovery. During volatility, trader cortisol matches soldiers in Afghanistan. Your brain literally goes to war, which explains why I once forgot my own phone number during a margin call. My wife asked, "What's wrong?" I said, "I'm in a war." She said, "With who?" I said, "Numbers." Ex-MIT mathematician, IQ 150 plus, could calculate black skulls in his head. During the March 2020 crash, couldn't do basic division. Cortisol test, 10x normal levels. He wasn't getting dumber. His brain was in survival mode. Here's something hopeful. That same mathematician now trades with a simple rule: no decisions during red days. Just observes, writes notes, executes the next morning when cortisol is normal. His returns doubled. Sometimes the best trade is waiting for your brain to reboot. Stress makes you stupid, not metaphorically, scientifically. Your prefrontal cortex, the math and logic center, shuts down. Blood flow redirected to fight or flight systems. You're trying to trade with half a brain. Meanwhile, in Connecticut, Renaissance's computers feel nothing. No cortisol, no panic, just probability. Try this tomorrow. Before any trade, do 47 by 13 in your head. Can't do it? Your cortisol is too high to trade. Think of your worst trading day. Could you solve 47 by 13 in your head? That's cortisol at work. You're not bad at trading under pressure. You're a human trying to do calculus in a burning building. Speaking of chemicals that mess with your head, Section 8, the dopamine dealer. Want to see your brain on winning? It looks exactly like your brain on cocaine. I'm not kidding. February 2021. Meme stock mania. I made 30K in 3 days, felt invincible. Dopamine was flooding my system like a broken fire hydrant. You know what dopamine wants? More. Always more. Bigger trades, bigger risks, bigger hits. Started trading with 1K positions. By day 10, $25 per trade. The wins didn't even feel good anymore. I needed bigger to feel normal. Then came the crash, both in the market and in my skull. Stanford neuroscientists scanned traders during winning streaks. The images, identical to cocaine users. Same regions, same intensity, same addiction pathway. Robinhood's confetti? That's not celebration. That's a dopamine trigger. They learned it from casinos. You're not investing, you're getting dosed. Every win increases your tolerance. Every profit demands a bigger bet. Your brain literally builds resistance to success. Warning sign. After your last big win, did your next trade size go up or down? If up, dopamine is driving, not strategy. After a big win, do you get conservative or aggressive? Your dopamine response is showing. But what if the problem isn't just chemicals? What if it's in your DNA? Quick breather. 6 signals exposed. $42,000 in damage. We're deep in the brain now. The scariest part? This is all happening without you knowing. Take 10 seconds. Breathe. Because the next section might explain your entire family. Section 9. The genetic lottery. Scientists say 45% of your risk tolerance is genetic, which explains why my grandpa hid money in his mattress, my dad hid it in CDs, and I hide it in 0DTE options. Evolution, baby. Finnish twins. Separated at birth. Both became traders. Both blew up their accounts the same way, on the same day, trading the same commodity. That's not coincidence. That's comedy. I called my dad. Why didn't you warn me I'm genetically programmed to buy high and sell low? He said, I tried. Remember when I told you to buy index funds? I said, that's not trading. He said, exactly. DRD4 gene, the risk gene. Some variants make you chase thrills. Others make you hide under rocks. Neither is wrong, but you need to know which one you're carrying. But here's hope. I met a trader whose entire family lost money in markets. Grandfather in 1929. Father in 1987, him in 2008. Same pattern, over-leveraging during euphoria. His solution? He now has a genetic hedge, automatically reduces position size when markets hit all-time highs. Broke the family curse. Your DNA isn't your destiny. Your DNA isn't your destiny, but it is your default setting. And the first step to changing your settings is knowing what they are. Action item. Call a family member today. Ask about their worst financial decision. You might discover your future mistakes in their past. Look at your family's relationship with money. What patterns are you unconsciously repeating? DNA is ancient programming, but some trading behaviors are even older than human gene. Section 10. The superstition chip. Citadel processes millions of orders on Friday the 13th. Guess which direction retail traders skew? The machines feast on your ancestral fears. I once refused to trade on the 4th, not July 4th, just the 4th of any month, because I lost money on April 4th once. That's not analysis, that's astrology with extra steps. Harvard MBA, hedge fund manager, never trades on the 13th, won't buy at $13 levels. His system subconsciously avoids all 13s. Lost his biggest opportunity because a stock was at 13 I thought I was above superstition. I was drowning in it. Even MIT PhDs have lucky socks. We're all cavemen in suits. The difference? Some admit it. Your primitive brain is trading alongside your rational mind. And guess which one moves faster when fear strikes? Check yourself. What weird rules do you follow that have nothing to do with data? That's your superstition tax. 6 signals down, $42,000 in lessons learned. 1 more to go. The market is a mirror, not a map. But first, let's talk about what happens when millions of broken brains trade together. Spoiler, it ain't pretty. Part 3, the mass hallucination. Madness is rare in individuals, but in groups, it is the rule. Nietzsche. Section 11, the self-fulfilling prophecy machine. March 23, 2020. 50 million traders had the exact same number on their screen, 2,137. The S&P 500's 200-day moving average. What happened next proves we're not traders. We're a hive mind with credit cards. The market touched 2,237.40 and bounced like it hit a trampoline. Not because of value, not because of fundamentals, because 50 million fingers hit buy at the same millisecond. Jim Simons at Renaissance made $1 billion that day, not by predicting the market, by predicting the hive. He once said, "We don't forecast patterns, we forecast believers in patterns." Think about that. The most successful fund in history doesn't trade markets. It trades your faith in moving averages. It's like everyone agreeing to meet at Starbucks because everyone agrees to meet at Starbucks. The coffee isn't special. The consensus is, when enough people believe a lie, it becomes temporarily true. That's not investing. That's inception. Technical analysis works, but not because charts predict the future, because they coordinate the present. The 200-day moving average is just a number, but when it becomes a religion, it moves billions. Test this. Next time everyone sees the same obvious level, ask yourself, are you trading the market or the crowd? Which indicators do you trust? Now realize, you're trusting other traders, not math. But some lies are more expensive than others. Section 12. Debunking the Fibonacci myth. I'll destroy Fibonacci retracements in 12 seconds. Ready? MIT tested them for 50 years. Success rate, 51.2%. A coin flip, 50%. So you're paying thousands to learn something 1.2% better than a quarter. Time's up. Fibonacci in trading is astrology for people who think they're too smart for astrology. I once paid $2,000 for a Fibonacci course. Know what I learned? The golden ratio of instructor profit to student stupidity. Here's the same course for free. Draw random lines on a chart. Some will work. Confirmation bias will do the rest. You're welcome. That'll be dollars. But wait, here's a plot twist. I met a profitable Fibonacci trader. His secret? He knows it's BS, but he also knows millions believe it. So he trades the believers, not the lines. He's not using Fibonacci, he's using psychology. There's a lesson there. The golden ratio appears in nature. Flowers, shells, galaxies, beautiful. But humans aren't flowers. Fear and greed don't follow mathematical constants. Market makers love Fibonacci levels, not because they work, because they know you'll place orders there. It's like fishing where the fish tell you where they'll be. Reality check. Track your next 10 Fibonacci trades. Compare to random entries. I'll wait. How much have you lost at the 61.8% retracement? That's not Fibonacci. That's your faith being harvested. But the biggest crowd delusion? It happened on Reddit. Halftime check. We've exposed 6 deadly signals. 1 more to go. But this last one? It's the most dangerous because it feels like community. Section 13. The Information Cascade Catastrophe. January 2021. A subreddit moved $20 billion with rocket emojis. This is that story. GameStop, $4. Dying retailer. Then Reddit found it. $40. $400. In 3 weeks, a subreddit moved more money than most hedge funds do in a year. With memes, diamond hands, rocket emojis, apes together strong. I bought at $380. Why? Because 2 million other apes were buying. That's not analysis. That's army ant behavior. And armies eventually run off cliffs. 4 a.m. We like the stock trending. My brain said research. My FOMO said buy now. I became part of the cascade. Another domino falling upward, until gravity remembered its job. Lost $7,000 in 48 hours, but gained something worth more. The realization that I wasn't a trader. I was a sheep who thought he was a wolf. Melvin Capital lost $6 billion fighting the cascade. The cascade didn't care. Information cascades don't respect fundamentals. They respect momentum. Hard truth. When everyone agrees on a trade, everyone's probably wrong, including you. When everyone is buying, do you research harder or just join? Your answer reveals your cascade risk. The 7th and final signal. Everyone's buying. I should too. 7 signals. $49,000 in losses. 1 more thousand to go. But cascades are obvious. The next manipulation is invisible. Section 14. The frame game. 2 charts. Same stock. One will make you rich, one will make you broke. The only difference? The zoom button. Tesla on a 1-day chart. Apocalypse. Tesla on a 5-year chart. Ascension. You're not analyzing data, you're analyzing someone's editing choices. And somewhere, a 22-year-old intern at CNBC is choosing which one you see based on what gets more clicks. Same data. Linear scale shows a bubble. Log scale shows steady growth. Which is true? Both. Neither. The frame determines your fear. Financial news producer confession. 2 charts prepared before market open. Market down, show scary zoom. Market up, show comforting scale. We don't report news, we craft narratives. Do this now. Change your default chart from 1 day to 1 year. Watch how different every decision feels. Check your chart settings right now. Who decided those parameters? Was it you or your platform's defaults? Every chart is pre-framed. The question is, who chose the frame and why? Frames are subtle, but the biggest lie? It's told every single day. Section 15, the narrative drug. Breaking news: markets fall because spins wheel. Mercury is in retrograde. Just kidding, they blamed the Fed. They always blame the Fed. Fed raises rates, market hates it. Fed lowers rates, market fears recession. Fed does nothing, market hates uncertainty. Financial media has written Mad Libs. Markets rise fall as investors cheer fear the Fed's decision to do something, do nothing. Trading floor veteran reveals the truth. We write both stories in advance. Market determines which one publishes. My last $1,000 lost believing this fiction. Now I read financial news for entertainment, like wrestling. Scripted, dramatic, and completely detached from reality. The narrative fallacy, our need to fit a story to a series of facts. In markets, the story is usually fiction. 7-day challenge, turn off all financial news, trade only price action. I bet your results improve. Turn off financial news for 1 week. Do your results improve? That's your answer. $50,000, 7 signals, countless sleepless nights, all leading to this moment. The market is a mirror, not a map. You've seen the disease, now for the cure, the void between worlds. There's something I haven't told you. After losing $50,000, I didn't become a better trader. I became a broken one. I knew every bias, saw every trap, and couldn't pull the trigger on a single trade. Knowledge without action is paralysis. For 6 months, I just watched. Charts moving, opportunities passing, afraid to be wrong, more afraid to be right. See, knowing your biases doesn't fix them. It's like knowing you're in quicksand, useful, but you're still sinking. I'd analyze perfectly, see the setup, know the exit, then nothing. Frozen. Because what if I was seeing patterns that weren't there? What if my stop loss was too tight, too loose? What if? The void isn't empty, it's full. Full of every mistake you've made, every bias you've discovered, every dollar you've lost, and they're all screaming at once. Then my mentor said 9 words that changed everything. You're not broken, you're ready. Now build your system. That's when I realized the void isn't the end, it's the beginning. Part 4, the transformation protocol. He who conquers others is strong, he who conquers himself is mighty. Lao Tzu. Welcome to the other side. This is where we rebuild you. Section 16, the mirror of truth. 1 Google Sheet saved my trading career. Not a strategy, not an indicator, a mirror. 30 days. Every trade, every emotion, every excuse. The patterns were horrifying and liberating. Tuesday, 3 p.m. Revenge trade after loss. Every Tuesday. Turns out I had a case of the Tuesdays. Cost me $500 weekly. That's $26,000 a year in Tuesday taxes. But here's what really shocked me. My winners all came between 9:30 and 10:30 a.m. My losers, after 2 p.m. My brain literally had trading hours, and I was working overtime in the disaster shift. The journal showed more. I held losers average 8 days, winners 6 hours. I was running a charity for bad trades and a sweatshop for good ones. Your move. Start a simple journal today. Just 3 columns: time, trade, emotion. Do it for 7 days. The patterns will shock you. Your edge isn't in the market. It's in knowing exactly how you'll sabotage yourself. Former poker player thought he knew psychology. Journaled for 30 days. Discovered he revenge traded after any loss over $500. Simple rule. No trades after $500 loss. Instant profitability. What would 30 days of complete honesty reveal about your trading? Are you brave enough to find out? But seeing problems isn't enough. Section 17. The pre-mortem protocol. Navy SEALs visualize mission failure before every operation. I stole their method for trading. Before every trade, how will this go wrong? List 10 ways. If 8 are emotional, skip the trade. Emergency room doctor. Saves lives daily. Applied pre-mortem to trading. About to FOMO into pumping stock. Pre-mortem lists 10 failures. Realizes 8/10 were emotional, not logical. Skips trade, saves account from -40% hit. Here's my actual pre-mortem from last week. 1. Stock could dump on earnings. 2. I'm revenge trading yesterday's loss. 3. Position size too big for account. 4. Chasing because Twitter is hyping. 5. No clear exit plan. 6. Trading out of boredom. 7. Haven't checked overall market. 8. Fighting the sector trend. 9. Hoping to make back losses. 10. Would I take this trade if I was up 50%? 9 emotional reasons. 1 may be logical. Trade skipped. Account saved. Template. Before your next trade, write 10 ways it can fail. If more than 3 are emotional, revenge, FOMO, boredom, do not trade. Pessimism before the trade. Optimism after entry. This flip changed everything. Gary Klein developed this for firefighters. They imagine the fire killing them, then work backwards to prevent it. Your money deserves the same respect. Before your next trade, spend 2 minutes imagining failure. Watch your position size shrink to sanity. But mindset without structure is just philosophy. We're in the transformation. These aren't just ideas, they're systems that saved my account. Which one will you implement first? Section 18, Building Your System Fortress. Forget everything you know about trading systems. This isn't about indicators. Air traffic controller lives by checklists. Hundreds of lives depend on following protocols. Applied same rigor to trading. His system, 12 rules, 1 page, laminated, ugly. Profitable. 1. No trades before 10 a.m., emotions not settled. 2. No trades after 2 p.m., fatigue zone. 3. Max 3 trades per day, quality over quantity. 4. Position size 1% risk, no exceptions. 5. Stop loss entered with order, not mental. 6. If down 2%, done for day. 7. If up 5%, done for day. 8. No trades on Fed days. 9. No trades first hour after bad sleep. 10. Screenshot every entry, accountability. 11. 10-minute walk after any loss. 12. Sunday review, every single trade. First month, painful. Robotic small profits. Year 2, I don't trade, I execute protocols. 300% improvement. Your system doesn't need to be perfect. It needs to be followable when your brain is imperfect. A mediocre system executed perfectly beats a perfect system executed with emotion. Build yours. Start with just 3 rules. Master them for 30 days, then add 3 more. Small steps, big results. What percentage of your trades follow written rules versus gut feelings? That ratio is your success ceiling. Systems create discipline, but the highest art? It's learning when not to use them. Section 19, The Profitable Art of Nothing. The best trade I ever made? The 10,000 I didn't take. Jesse Livermore made $100 million in 1929. His strategy? He did absolutely nothing for 6 months. In a world screaming trade, silence is golden. Hyperactive day trader, 300 trades per month. Burning commissions, burning capital, burning out. Mentor challenges, go 30 days, no trades. Week 1, agony, checking charts every 5 minutes, writing trade ideas, not executing. Week 2, withdrawal symptoms, dreams about missing moves. Week 3, clarity, seeing how many would have failed. Week 4, peace, markets moving without him, world not ending. Returns after 30 days, takes only A+ setups, goes from 300 trades to 12 per month. Income triples, stress vanishes. Here's the paradox that changed my life. A trader who never trades but always watches will outperform a trader who always trades but never thinks. The money isn't in the movement, it's in the waiting. Money is made by sitting, not trading. The big money is in the waiting. Cash is a position. Patience is a strategy. Doing nothing is doing something. Your broker wants you active. The market makers want you active. The financial media wants you active. Everyone profits from your activity except you. 30-day challenge. Cut your trade frequency by 90%. Only take trades you'd bet your house on. Report back. Could you go 30 days without placing a trade? If not, you're addicted to action, not attracted to profit. All these tools serve one master transformation. Section 20, The Identity Revolution. The day I stopped calling myself a trader was the day I started making money. Casino dealer turned trader, kept treating markets like gambling. Because that's what traders do. They trade, they action, they gamble. Massive loss, identity crisis. Therapist, who are you without trading? Silence. Then I don't know. Good. Now you can become who you need to be. That's when I chose. I'm not a trader. I'm a guardian of capital. Traders seek action. Guardians seek preservation. Traders need excitement. Guardians need process. Traders chase. Guardians wait. Traders gamble. Guardians invest. One word. Everything changed. Your identity drives your behavior. You don't rise to your goals. You fall to your identity. Change the identity, change the destiny. I lost $50,000 as a trader. I made it all back as a system executor. Different identity, different results. The question that changes everything. Are you a trader feeding your ego or a professional protecting capital? Close your eyes. See yourself in 6 months. Calm, profitable, in control. That's not a dream. That's a decision. Who are you? A trader seeking thrills or a professional managing risk? Your answer is your future. Remember the beginning? Your brain firing 7 wrong signals? Now you fire 1 right one. Discipline. You came seeking a secret. You found it. Your brain is 200,000 years old, running in 21st century markets. 7 deadly signals exposed. 7 ways your mind betrays you. But also 7 opportunities for mastery. You've seen how I lost $50,000. More importantly, you've seen why. And most importantly, you've seen the way out. Path 1. Leave here. Trade the same. Donate to the same algorithms. Path 2. Accept your wiring. Build your systems. Transform your results. The market doesn't care which you choose, but your family does. Your future does. The 50 Keller lessons are now yours. You know the 7 deadly signals. You have the pre-mortem protocol. You understand the system approach. You see the identity shift needed. Your next move, pick 1 signal that's cost you the most. Comment below. Then pick 1 solution from part 4. Start tomorrow. Not someday. Tomorrow. Comment which deadly signal has cost you the most. Let's count the damage together. If this opened your eyes, share it with a trader who's still blind. Not because I said so, because their account depends on it. Your brain is about to fire 7 trading signals, but now you know they're wrong. The market is a mirror, not a map. You've seen the strings, now cut them. Your transformation starts now.